Hey everyone. Like I've said before, the video lessons moving forward, I believe, are only going to, I'm only going to be doing video lessons that really have true value. Not that I put out fluff. I really don't believe I've ever put out any fluff, but I mean, just moving forward, it's not like I'm just going to be pumping out content just to put out content. Um, these, the video lessons now are just going to be really, really important, really well thought out. I just want to make sure that it really gets through to you guys, okay? So I'm going to do a video lesson. I should pull up the daily chart because that's what it's about, is Dojis. How to trade Dojis and small-bodied and small-wicked candles, okay? Like candles like this or this, and this, right? So when you have a doji day, especially a doji day, it's a candle of indecision, right? We've all heard that, right? It's just kind of, it doesn't know what the hell it wants to do. It's usually a sign of trend reversal as well. Okay, so how do you play these? Well, it's simple. It's very similar to my high of day, low of day, long short bias video. Okay. Now there's certain levels. So I'm just going to get zoomed right in just on the doji because that's all we're really going to look at this evening, okay? So we have low of day and we have high of day. All right. Now, how do you trade this? So it depends on where this opens up. We're gonna pretend that the market doesn't gap up or gap down. Okay. I know that's kind of bullshit, but it is what it is. We're going to pretend that this is basically going to open up flat on this candle. And I'll go over another candle where it would gap up a little bit or gap down a little bit. But this candle here, let's say it opens up flat. So right out of the gate, how do you play this? Well, same thing. Review that high of day, low of day, long short bias. Okay. If it dumps nice and fast, it will, you have to trust this, guys. It will hold this. It will bounce. But I will say this. It may not bounce much, but it will bounce. It's not going to just dump from here and just break and continue going down. It won't, because there's the reason why is a psychological reason. Okay. It's also a technical reason, but it's mainly a psychological reason because there are going to be traders that are waiting for this move. See, this move, this high of day, low of day, short long bias, this is how professional traders look at these candles, okay, for technical analysis and how they develop their trade plans. You guys do realize how important this lesson is, right? So I just want to point that out before I go any further. This is like this is extremely important. So if you don't understand it, watch and rewatch, please, okay? So the reason why it holds is because professional traders are they believe in technical analysis. If you're a technical trader, you believe in it. That is your strategy. That is your Bible. That is gospel. You treat it as such. They will have orders sitting there. Okay. They'll have orders sitting right at 273.55 or just above, right? That's how you get higher lows on the daily chart when it comes down to lows. Okay. So it may gap up just a little bit. Sorry, I'm zoomed in too far and it wants to snap. So, but that's why it will bounce there. Now it might just bounce a candle or two. I'm not saying it's going to continue up and drive to highs. I'm not saying that. But what I'm saying is it will bounce. Same with it opening here and driving up to highs. It will reject there. It will. Now, it might be a little candle. It might be a big candle. It might completely fail. It might pull back for one candle and rip and break out. But at that very price, it will reject. It will, okay? So that's basically what you look for on these dojis, okay? Now, I'm going to go over the 4 things. Now, write them down. Watch this, rewatch it, and write these 4 things down. This is how you play doji candles or small-bodied candles. Basically, like this would be a consolidation day, consolidation day, consolidation day, consolidation day. Although it's falling down, it's still the day consolidated. There's not a lot of range on the day. Same with here. It's basically a consolidation day, okay? These are the 4 things. If it falls out of the gate, watch for it to hold support and bounce. That's number 1. Number 2, if it opens up and rips to highs, watch for a rejection. Go short if it rejects. That's number 2. Number 3, if it rips down to lows and breaks this, short it. Now number 4, if it rips to highs and breaks, go long. Okay? There are a couple more in there, all right? Now, to get to the next level of things, the next step of looking in your trade plan, that's only step 1. Just follow with me, guys. Follow, okay? That's just step 1. And there's four potential outcomes for step 1. Now, step 2, part of your trade plan, and I'll just give you like one example. So let's say it dumps and it holds, so you take it long. Now we got to wait and see what it does at high of day, at highs, okay? Now it'll reject. It will reject this. It'll pull back, okay? Now you got to make a decision. Now you got to see if it's holding. Let's say it pulls back. Now where does it pull back to? It'll most likely pull back to the VWAP, okay? So you watch the VWAP to hold. If that breaks, most likely you could get out, okay? Or make sure you pay yourself and then see what it does at the retest of lows, because it will retest lows again. Or it could pull back and hold the VWAP and then come back up and break to highs. Hold on a sec, guys. I got to plug in my headphones. There we go. So does that make sense? Clear as mud? Okay. So that's basically how you play doji days. I know this is a very similar video lesson to high of day, low of day, short long bias. It's basically the same thing, but especially with dojis and small body candles. Okay. That's why I didn't trade Tesla today, right? I wasn't necessarily interested in it today because there's too much range on this day. So let's say I wait for a test of lows or a test of, the previous open. Where did it test? It did test there and it bounced. Do you guys see that? Right? Do you see the levels it bounces from? There's only 4 areas it can bounce from, and it will bounce at one of those levels. Okay? Give or take a few cents. Low of day, previous open, previous close, and high of day. The makeup of the body and the wicks of the candle on the daily chart are so important. They're so important. I can't stress that enough. Okay. So what do we do now with a bigger bodied candle with wicks? Like now we're starting to get into quite a bit of range. Well, I just kind of went over it. Now, instead of just watching low of day, high of day, now you're going to watch low of day, previous open, previous close, and highs. Lows, previous open, previous close, highs. Lows, previous open, previous close, highs. Lows, previous close, previous open, highs. Okay? Same thing. That's it. If you write this down and you burn this lesson into your brain, I'm telling you, you will have the market licked. This is it, folks, okay? This video lesson right here, in conjunction with high of day, low of day, is worth hundreds of thousands of dollars to you. I'm serious. That's how much this video lesson is worth. For those that understand it, okay, and they get how important this is, and they can see long-term, bigger picture, they would know that I could charge $10,000 for just these 2 video lessons. I could, and you would still come out ahead. What I'm getting at, obviously, I would never do something like that. But what I'm getting at is just how important this is. So please watch this over and over and over again. All right, folks. I hope that was clear for you. I hope you guys learned something. I hope you guys enjoyed it. If you didn't learn anything because it went whew, right over your head or something, watch it again and again and again and again and again and again and again until it burns in your brain. Okay, guys? Adios.